Well, hello, Maverick traders. It's Joe with you here on the 30th of April. It's a Tuesday. Let's get into it. I've got my 2 cents. You guys know how this works. I'm going to break down the meaningful news of the day. Let's take a look at some charts. And if I've got something to share with the community, I will, as always.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, you're going to see that we actually had a little bit of a rollover, which was to be expected. As this bearishness continues, let's jump straight into the news. Employment costs move higher, along with the S&P Case-Shiller Home Price Index. These are both inflationary gauges, so we did see a pretty good move out of the markets. Take a look at how we closed real quick, and you can see that we actually flushed out into the close. Overall, we finished down about a 1.5% on the SPY, the diamonds, 2% on the Qs, 2% on the Russells. Gold took a pretty good pullback as well at 2.36% there, and oil down as well at 1.2%. So what does this leave us with? Well, let's jump into the advanced decline line here. 79% declining, 17% advancing. It was just a general sell-off overall. We'll get to the chart here in a second. You can see it was very technical. 71% below their 50-day moving average and 29% above. So what do I mean by that? Well, let's just jump straight into this chart. This was almost a picture-perfect bear rally from the high set late in March. Look at the crossover here, this 2050 crossover. We still have a flattening 50-day moving average. A death cross is a 50-day, 200-day moving average. Let's call this the mini death cross, which is the 50-day, 20-day moving average. I don't know, whatever you want to call it. Regardless, folks, it's just simply a descending price pattern. This is kind of widening here. A little bit of an increase in volatility when it comes to the ranges, right? So, yes, there's definitely some selling going on. One thing that I thought would be notable was the volume that we saw today with this candlestick. And yes, like I showed you earlier, we did close on our lows. Let's jump into the Qs. It's pretty much the exact same thing. Let's see if I can get this box up and keep it there so you guys can see the range that I'm talking about. A little bit of consolidation there. Looked like it was going to stay on board, but you could see here's that crossover as these markets decided they wanted to roll over at this point and roll over aggressively. Nice bounce, but a big move to the downside coming back to this falling day 20 moving average. This becomes a little bit more substantial than it was seriously just about a week or so ago when we were waiting for this bounce. This bounce could have gone all the way back up to this area, a little lighter. Decided it wanted to turn over just at this point. So yes, we are definitely showing some more bearishness in these markets. As we move over to the heat map, this absolutely verifies everything we're talking about. So let's take a look at where I moved to. This 2050 slope, I really wanted to make this almost a darker pink. Yeah, because it's the 50s flattening, but that crossover is pretty significant. And it basically where this price point decided to pivot with today's volume and on top of today's candle, simply a -2 for the weekly and the monthly outlook is a no-brainer here. I could absolutely go probably -3 on the monthly outlook if I was to get a little bit more of a slope in that 50-day moving average. However, my next focus, and since you guys are here, let's just kind of squint your eyes, is going to be that support level based on whatever the Fed does or does not do, what they say, and more importantly, whatever the markets decide to react to. So that is kind of where we're sitting. No real change overall. I don't have much when it comes to the overall trades, folks. Delta Airlines is hanging in there. There are some strong stocks out there. Folks, I talked a little bit last week about the banks, Goldman Sachs, Wells Fargo, JP Morgan, Citigroup, Capital One. They're still holding in there pretty good. But yeah, everything out there did pull back or show a little bit red today. And I don't think that has anything to do with the specific charts themselves. It's just a pretty bearish day overall, and that's where we're at. I don't have anything on the sideways side, but I do like CRM and Microsoft and Schlumberger or Schlumberger. on the bear side. So let's take a look at the charts that we do have. Overall, this is Delta Airlines. I pulled this up with you folks last week. I do like it. I still think it's holding in here. Bad day in the markets overall, but this thing decided to hang in there. Here's the area that I think it could consolidate at, even with a pullback. So sideways to up, I still like in this stock, but it doesn't mean that I'm going to buy it today. Let's get straight to our bear. This is Schlumberger, or Schlumberger is what I like to call it, folks. However, I liked the breakdown and what's happened, and this is just kind of what I saw in a lot of the stocks, like you guys saw in that chart when it comes to intraday. Just a lot of let's get out and we'll worry about it later at this specific level. Take a look at the volume it coincides with, and it's actually starting to push a pretty significant bottom, something that we haven't seen since the beginning of this year. So nice little bounce off of January, which the rest of the markets did. Schlumberger really didn't get any traction. Mid-February, it retested it again, and here we are with a pretty decent increase in the volume. So that is a pretty good or a decent potential bear if that's what you're looking for. Overall, folks, like I say, we got a Fed announcement. Very difficult to trade these, so I'm just going to sit back and take a look at where I'm at. We've got a lot of earnings. We're in the midst of earnings season as well. In fact, let me just skip straight down to it. Amazon, AMD, Starbucks out tonight. Amazon actually beat numbers. I'm not sure what they're doing right now, but we've got MasterCard, Qualcomm, Pfizer, and CVS tomorrow, along with a whole slew of others. So just make sure you're aware of that. Market outlook overall, the markets move lower from a strong technical level, a bearish cross. We have that 50 yet to turn over, but it is ominous. It is still bearish in my book. Volume increased as the markets closed on their lows. Could this be because of the worries of being in the markets with a Fed announcement looming tomorrow, or the fact that we actually just kind of confirmed a resistance area and things are rolling to the south side? It's too early to tell. However, if you're on the bear side right now, great. If you want to do something bullish, I would just sit on your hands. Drop in consumer confidence. I thought that was pretty interesting. Now that should resonate down the road, but it was interesting to see how far it dropped. It was a big drop, folks. Probably the lowest it's been in almost 2 years. Like we saw on that first slide, but inflationary readings remain in both home prices and employment costs. We have an inflation problem, a drop in confidence with the consumer. So we get that scary stagflation. Yes, folks, I did air quotes. You couldn't see me. The stagflation worries that causes its own problems in these markets. We'll see what earnings do, and more importantly, what traders do with that information. Do they buy into good earnings, or do they just pull out? That will really give us a readable indication into sentiment moving forward. FOMC tomorrow, always fun, always great. Sit out, don't touch buttons if you don't have to. Pretty much that FOMC tomorrow is going to be the driver, or the majority of the driver, I should say, of tomorrow's markets. If there's a trade you don't have to make, don't make it. If there's something that you could put off until the end of the week, do so. Making trades on a day like tomorrow is never really a great idea and doesn't really pan out. Let's give it an extra day and we'll see what happens. All right, folks, thanks for joining me. We'll talk to you next time. Bye, everybody.